What's up, YouTube? Happy Wednesday. Welcome back to another video. We're sitting at 171.812. Bought a little bit more Microsoft this morning, and it's been a little shaky. CPI came in a little higher than expected. I think oil prices are affecting that read a lot. So we saw a 3.8 CPI read, which is the highest level in the last couple of years. So not necessarily a good thing. A couple catalysts for us to watch for, I think, in the coming months are rate hikes. There's now a 30-something% chance, 36% chance that the Fed might raise rates. And if the Fed raises rates, it's not going to be good. The market will 100% correct. We're not expecting rate hikes. We were expecting a rate cut, but now it's out of the picture. But if we get a rate hike, I don't think we will. That's going to be pretty catastrophic, I'll be honest. Another major catalyst for us that we should watch for is the IPOs coming in the coming months by the end of the year, with SpaceX and OpenAI, maybe Anthropic will IPO as well. If those IPOs go well, I think they're going to carry a lot of momentum into other stocks as well, like the ones we've been talking about, like Meta, Microsoft, Nvidia, whatever it is. All of these big NASDAQ stocks, I think they're going to go up. But if they don't, I think they're going to drag a lot of the market down. And that's mainly because everybody's been waiting for these IPOs. And, if SpaceX and OpenAI come out with their 1 trillion valuation, it's going to be hard to justify buying up those assets because, dude, a $1 trillion IPO, some of these valuations for OpenAI and Anthropic are just absurd, given they don't make much money. And I understand, they're betting on future revenues, the technology is amazing, but valuation wise, when you break it down, a lot of these don't really make sense. But, we'll see if retail is going to be exit liquidity for all these institutional buyers. It's some you should watch for it. You just be careful. Don't just go and buy so much of it. But something I wanted to talk about today is RVI. So this is Robinhood Venture Fund 1, and this thing has been quietly killing it. We're up 24% on the day. Whenever they IPO'd this or started offering this fund for us to buy, I ended up buying, I think it was 5 shares, and I've honestly bought more. So as you can see, I've had an 86% return, which is just crazy. 23% of the day. This is basically a private equity, private investment fund that Robinhood lets you buy. And a couple of their holdings here, they have 10 of them. Databricks, Revolut, Mercor, I won't go through all of them. OpenAI is one of them. But if you look down here, we got a couple more like Stripe, 11 Labs. Those are all great companies, very bullish on as well. And it looks like retail's actually buying this up. And they also announced RV2, so their second venture fund. And maybe that's why we've been seeing so much activity with RVI. But this has been interesting. Honestly, it's been like a sleeper pick. I wish I allocated more money into this, and this could be as my other bets category. And I'll make a video on my whole portfolio allocation, what I think of these companies, and where I think of allocating money for the future. So be on the watch out for that. And if you're watching this video, don't forget to subscribe. The channel's been gaining a ton of views and a bunch of interactions, but not many subscribers. So don't forget to subscribe and leave a like if you like this content. Going back to some activity here on RVI, I ended up buying another 8 shares at $47. And as you can see, when they started the fund, I bought some more shares after they rose to 35 and then bought some more 47. If we go show more, I think you'll show us, I bought 10 shares to start with. I thought $250 was just enough back in March. And it was. It was an experiment. I really did not know where this was going to go. This could have tanked right off the bat, but it looked like it did pretty well. So I'm happy with this so far. This is, a very speculative bet. And I thought this was going to be extra liquidity for all these people that are invested in these companies. And Robinhood was going to be the vessel for that. But it has surprisingly worked well. And as we look today, we're up another 27%, which is just bizarre to me. This is crazy, guys. But anyways, wanted to share this with you guys. RVI, definitely really cool. Be on a watch out for RV2, their second venture fund. And I'll cover this with you guys as well, see what happens. It looks like we're having a small dip here on BTC and Ethereum as well, with an almost 2% drop on the day. And, BTC has been lingering on the 80s mark. I think we had an 84K day the other day, but it has not really broken to that resistance level. Be on the watch out for BTC and Ethereum. I do think they're still undervalued, especially Ethereum. We might see another good cycle here where Ethereum goes up to 5K. If you look at Ethereum, this thing goes in cycles. If you look at the 5 here, you can see we saw an all-time high of 47.80. And then back in 2021, we saw that same like 4,600, 4,700 level. And we see a major dip and then a little bit of a rally here, but then more consolidation to the bottom at up to 1,000 right here. But if you bought at 1,000 back in 2022 and you held all the way through 2025, like you're making a 470% return. So this is what I'm hoping for right here with my Ethereum position. I don't hold much Ethereum. I only hold 2.6 Ethereum with an average cost of $2,100. But this is my hope right here that we see another big push to the 4K mark. And once we do, I would just sell out of it. I'm not necessarily extremely bullish on Ethereum or Bitcoin, very speculative still. I do think they're going to have a purpose and serve value to people in the future. But as of now, like there's just too much stuff in the air. I do think it's important to play these as well because crypto just moves very differently than stocks. Like you just look at this chart, like we see all-time highs and then we see all-time lows within the same like year. And that's just kind of insane. So be wary of Bitcoin. You know, I used to trade crypto a lot more when I was younger and not as much anymore. As I used to trade on Coinbase and FTX and all those different exchanges. I used to use MetaMask to transfer coins around. I was in the whole like initial coin offering back in 2020, 2021, made a couple $100. It was fun. But, you know, as of now, like I got to play with the big boys and stay in equities. So this is what I do. Portfolio is actually having a little bit of a rally here since the start of the video. 172.1 for the day. Honestly, not sure what's driving that. I know Google's having a great day right here. This is probably what main of the gains are coming from. Let's look at Google here. A 2% gain on the day represents $1,000 now for this position, which is just insane. Back in April during Liberation Day, when I was buying Google, I was just kind of hopeful that the company was going to go up. Like, yeah, I have my thesis on Gemini and their cloud storage business. There are other bets that include Waymo. Now they just bet on Anthropic with $40 billion. Like, I've always been a big fan of Google, but I did not expect it was going to rise this much, this fast. And Google has been the stock of the year for, I think, the last 12 to 18 months. So no surprises here, 140% gain overall, representing 30 grand. And, you know, a 2% gain just on Google represents $1,000, which is crazy. Like for me, $1,000 is still a lot of money. Like, dude, $1,000, how much money I spend on a month for like groceries and dining and whatever it is. Like, dude, I don't spend much money. So like whenever you see a move of $1,000 within like 2 hours of your day, like it's pretty bizarre. But this is what happens when you stay diligent with your investments. 5 years ago, I was in college and I was driving Uber Eats and working as a server at the theater. So like your life can change pretty fast if you stay disciplined and you learn high income skills and you start making more money for yourself, getting some good opportunities and invest that money aggressively and take some risk. And that's just what I believe in. And if you're a young person, like you're 20, 21, 22, like, dude, things are going to get better as long as you stay focused on the mission. You get some high income skills. You learn a lot from your experiences. You get into the best opportunity that you can get. So I just thought I would share this with you guys. You know, big fan of Google, probably never sell these shares. Like I really don't want to pay taxes on $30,800 worth of gains. Like that would suck really bad. So I'll just hold this here on the portfolio until further notice. In quick update here on Microsoft, feels like every day I'm talking about Microsoft. Bought another $2,000 this morning, bringing us to 65 shares. Actually ended up selling out of MSFU and I made a $40 gain. Could have made like a $500 gain like I was talking about the other day, or maybe even a little higher. But I think the market has kind of shifted a little bit, especially with this recent CPI read coming in negative and the Hormuz canal not really being sorted out yet. And with Trump and Iran situation not going super well. So I think a lot of the narrative has changed. So sold out of MSFU because, you know, things could change really fast here, especially if oil starts spiking again. Every $10 that oil prices go up, we see a 0.3 reflection on our inflation read. So if you follow crude oil prices closely, if you see every $10 that goes up, inflation just goes up by 0.3%, which is crazy. Like that's a lot. And we've seen oil move like 10, 20%. That represents like 10, 20, $30 on the price of crude oil. So inflation is going to come in hot, I think, for the next couple of months until this whole situation with Iran is sorted. So I remain bullish overall, but still very cautious, understanding that a lot of these companies in the NASDAQ, like NVIDIA, Google, Meta, Microsoft, they're the ones kind of pulling a lot of the gains. So if you see like the NASDAQ, like yesterday, for example, was ripping to like 1.8% on a day, a lot of the companies on the index are not making gains. It's just mostly like Micron, SanDisk, Google. So the index start being like very, very top heavy. So it's important to understand, like, yeah, the Nasdaq's ripping, but not every company's returning all those numbers. So this is an update on the Microsoft position. Probably build this up to a 100 share position in the coming months. We'll see what price action gives us here. If we see another major dip, I'll deploy the 18K that I have and build this to a 100 share position, and I'll be happy there. I think that's enough exposure to Microsoft. Something I've learned too in the last couple of months is whenever you have a conviction, it's important to also have size behind it. Because if I have a conviction on Microsoft and I just put like 5 grand into it, like that's not going to change much for my portfolio. Like if I see a 70% return on $5,000, like sure, that's a great return. If you think about it, like you got to have more size whenever you have these big convictions on your portfolio. So this is what I think, as your portfolio grows, it's uncomfortable to buy $40,000 worth of Microsoft because, like I mentioned, not very long ago, my account was at like 106. Like check this out, guys. Let's look at the 1 year. This account was at 126, March 28th. Like when was that? Like 2 months ago, if that. So, it can feel a little uncomfortable to make such big bets, but that's just what you have to do if you want to bring your account up and have major gains and kind of get to the next level. So at first, I know it can be uncomfortable, but if you have a big conviction on these stocks and Meta, Microsoft, like Google, all these that I've been talking about, they're great companies. It's just a matter of timing here, really, and understanding like what part of the cycle they are at and what part of the macro cycle we're in right now. A lot of risk with Iran and oil prices and inflation, and a couple other catalysts like I talked about with rising rates, which would be honestly pretty catastrophic for the market, and the IPOs that are going to be a big, big deal in the coming months. So we'll be watching out for that. Portfolio sitting at 171.5. This is how we look on the 1 year. Year over year, we're up 45%, $53,000. I don't take much into account on the percentage-wise because I take money out of the accounts. I put money in, so don't take much weight into the percentages, but the dollar amount there is accurate. So 53K year over year, pretty happy overall. Let's look at all time. And this chart goes back to like 2020, which is crazy when I opened the account. And as you can see, all time, we are at $56,000 gain with a 48% return. Year to date, I think we're matching the Qs or maybe beating it by a little bit at a 14.5% return at $21,000. On the 3 month, this is going to look a little crazy at 28K. And then in the 1 month at 22K. And on the week, we're probably going to be down a little bit at 0.8%. But overall, this is where the portfolio sits. Let me know what you guys think in the comments. Don't forget to leave a like, and I'll talk to you guys soon.